Excellencies, dear ladies and gentlemen, welcome to this joint special event co-organized by UNDP, UNCTAD, UNDESA and the ILO on the role of business and the financial sector in financing a sustainable and resilient recovery from COVID-19. My name is Beata Andres, I'm from the ILO and I will be moderating this event today. Yesterday, at the high-level political forum, we already had a discussion on the importance of financing development. Many governments took the floor. Today, we will further continue this discussion, but focus specifically on the role of the private sector and financial sector. We have a very impressive lineup of speakers, so my role as a moderator is to speak as little as possible and to give room to our speakers. So without further ado, I want to welcome the speakers of our opening panel, Mr. Meninder Sidhu, who is the Parliamentary Secretary to the Minister of International Development of Canada. Mr. Sidhu, welcome today. And we have Mrs. Denise Seeley. She is the Chargée d'Affaires of the Permanent Mission of Jamaica to the United Nations. Both Canada and Jamaica played a key role. They are the co-chairs of the Initiative on Financing Development in the era of COVID-19. So your leadership has been instrumental in moving this debate forward, and it is a pleasure to hand over the floor to you. Mr. Sidhu, please.
Thank you, Ms. Andres, and good morning, everyone. Thank you for the opportunity to join you here today. While we continue to face an extraordinary situation, the ever-evolving COVID-19 pandemic means that global cooperation has never been more important in responding to the immediate health crisis and in pursuit of an inclusive, sustainable, and resilient economic recovery. Multilateralism, solidarity, innovative partnerships. The last year has only reinforced their importance as we work with all stakeholders to try to protect the health and safety of our populations. Pre-pandemic, there was already an urgent need to mobilize new forms of resources beyond ODA to fulfill the 2030 agenda. We know that the pandemic has exacerbated existing SDG funding shortfalls and that we are in danger of losing the development gains made. Countries had to mobilize significant resources to respond to the pandemic, both domestically and internationally. Canada has mobilized more than $2.5 billion in international assistance in response to the COVID-19 pandemic. A significant part of this funding has been through multilateral organizations, including within the UN system for both humanitarian funding and development assistance. But we know that ODA will not be enough to adequately respond to and recover from the impacts of COVID-19. That's why the Prime Ministers of Canada and Jamaica and the United Nations Secretary-General launched the Financing for Development in the Era of COVID-19 and Beyond initiative in May 2020. In the early stages of the pandemic. World leaders and other key stakeholders have met several times since then to identify high impact solutions to many of the development finance challenges countries are facing. This initiative follows on 4 years of dedicated work and leadership by Canada and Jamaica as co-chairs of the UN Group of Friends of SDG Financing. Now, I know a number of countries that contribute to the Group of Friends are participating in this event today. Your contributions over the last several years, and in particular in response to the financing challenges presented by the pandemic, have been invaluable. Through the Financing for Development in the Era of COVID-19 and Beyond initiative, the international community came together. They identified 259 policy options on a broad range of issues to help guide not only pandemic response, but global recovery over the long term. We appreciate the active role that UN entities are playing in operationalizing policy recommendations from the initiative and continuing the discussion through events like this one. Since the onset of the pandemic, financing for development has continuously been included as a key priority in COVID response and recovery discussions. Beyond immediate pandemic response and recovery efforts, we need to stay focused on our long-term development goals and continue to make progress towards a 2030 agenda. We believe that new types of financing to help reach the SDGs must have gender equality at their heart. The Government of Canada has contributed $300 million to establish the Equality Fund, a first of its kind global feminist platform. It brings together government, philanthropic, private sector, and civil society actors to create a sustainable source of funding for women's rights organizations and movements in developing countries. The Ford Foundation recently announced a $15 million contribution to the Equality Fund, making it the second largest donor to this initiative. We invite others to join us in supporting this innovative partnership model. We also need to transform institutions, practices, technologies, policies, lifestyles, and thinking. We need the business and financial sector to develop innovations that will help us achieve a more inclusive and resilient recovery. And corporate strategies and business models need to integrate long-term sustainable development objectives and be aligned to the SDGs. Increasingly, we are seeing private sector shifting their business activities to support both financial and social returns. Donor countries can and should provide the incentives to catalyze these investments. Canada's Feminist International Assistance Policy recognizes the fundamental role that the private sector plays in driving innovation, productivity, and inclusive economic growth. It also recognizes the importance of partnering to achieve development results. Guided by this policy, Canada will continue to seek opportunities to strengthen and expand partnerships with the private sector. I would like to close today by thanking Deputy Permanent Representative Denise Seeley for Jamaica's close collaboration over a number of years in the UN context on development, finance, and through the recent Financing for Development in the Era of COVID-19 initiative. We look forward to continuing to work with Jamaica and with all of you. Thank you very much.
Thank you so much, Mr. Sidhu, for these welcoming remarks, and in particular with the much welcomed announcement of new funding injected to the recovery efforts, and in particular addressing the gender dimension. Thank you so much. Now, let me hand over to Jamaica, to the DPR, Mrs. Seeley. Please, the floor is yours.
Thank you, Beate. Good morning, colleagues, excellencies. It is my pleasure to be here this morning, and I join Parliamentary Secretary Sidhu in welcoming everyone to this joint high-level event and to express our appreciation to UNDP, UNCTAD, ILO, and UNDP for organizing such an important event. A year has passed since the Prime Minister of Jamaica and Canada and the UN Secretary-General launched the Financing for Development initiative in the era of COVID and beyond. Decisive action now needs to be taken to ensure that there is a sustainable path to global recovery in the short, medium, and long term. A recovery that is less uneven and leaves no one behind. I was therefore very pleased to hear the announcements of Parliamentary Secretary Sidhu, and I really appreciate the fact that Canada is doing so much to ensure that countries such as mine can really benefit or recover from COVID-19. Now, we recall the ambitious menu of policy options presented to our heads of states and governments last year and the roadmap created earlier this year to ensure implementation of these policy options around some of the most pressing issues. Only a few days ago, we experienced the first named hurricane or tropical storm of the Atlantic hurricane season, and that's Hurricane El-Said. We have seen and heard of her impact across the Caribbean, a region that is experiencing the deepest economic contraction in decades due to the pandemic. Now, for countries in the Caribbean, it's only through adequate financing that we will be able to effectively address climate crisis, provide socioeconomic responses to protect the poor, the vulnerable, support sustainable business growth and job creation, and strengthen policies and institutions for resilient recovery. We therefore look forward to hearing more on the progress made by the UNDP and ILO and UNCTAD on the way forward that is being articulated for financing climate action, socioeconomic response, and technology. While government policies set the framework for investment, it is the business and the financial sectors that are the cornerstone of economic growth. In some instances, we can say that some private sector companies may be struggling to remain viable during the pandemic. Notwithstanding, we believe that they remain critical partners for the realization of development objectives at all levels, including through innovation, investment, public-private partnerships, and the promotion of greater financial inclusion and literacy. We see today's discussions as representing a positive and required step forward to ensure that our ambitions are translated through our collaboration with business and financial institutions into tangible outcomes. These, we expect, will absorb the adverse social and economic effects of the COVID-19 pandemic and put us on a track to achieve the Sustainable Development Goals of the 2030 Agenda. Back to you, Jutta. Thank you so very much.
Thank you so much, Denise Seeley, for those opening remarks, DPR of the mission of Jamaica to the UN. And again, to both Canada and Jamaica, a warm thank you for your leadership. You have played a key role in convening member states, but also United Nations entities. And this is the segue into our next opening panel. I have the very distinguished pleasure now to welcome the heads of 3 agencies, UNDP, ILO, and UNCTAD, these 3 agencies have facilitated multi-stakeholder discussions on financing climate action, a socially inclusive COVID recovery, and digital transition. So without further ado, I'd like to now welcome Mr. Achim Steiner, the Administrator of UNDP. Mr. Steiner, the floor is yours.
Thank you, Beate, and thank you to Canada and Jamaica also for joining us for this event. And I'm very pleased to join Guy Ryder and Isabelle Durant also because for all of us, I think right now, the red threads that have run through the last 15 months, whether in terms of coping with the crisis, whether looking forward at a recovery narrative, but also the priorities that governments can set, financing is all over this agenda. It is both the Achilles heel, it is both the pivot point, and it is in many ways also a high risk scenario because of the inequality and the unequal means by which countries are able to respond right now. Now, in our discussion today, I want to focus briefly on that interplay between public policy and finance and private sector investment, because really our focus today is on the role of business and the financial sector in financing sustainable and resilient recovery. And having just attended on behalf of the United Nations, the G20 finance ministers and central bank governors meeting, I think it is fair to say that in capitals across the world right now, the centrality of financing is clearly on top of the agenda, and the Financing for Development dialogue that Jamaica and Canada, together with the Secretary General, have facilitated over the last year, have hopefully contributed to sharpening our understanding that we are faced here with not only an emergency in health terms and development terms, but also with an extraordinary opportunity that as yet is not really being seized sufficiently, namely to in a sense, invest our way out of this crisis into a transition towards a more resilient, a more inclusive, and a more sustainable economy. In the context of public policy and financing, clearly what we observe across the world, and I'm sure my colleagues and other panelists this morning will speak to this, public policy is not a parallel universe to where private finance becomes scalable. And the interface between these two is central. In fact, with Guy Ryder, over the years, I have worked time and again very closely also on the whole framework for green jobs and green transitions and green economies as they emerge. And we all know how central in the context of the challenge of climate change, the issue of investment and finance has become. Public budgets are not the single silver bullet with which to both manage the crisis or indeed to finance the recovery. So we do need to look carefully at what is it that will make financial markets and business players align the enormous leverage that private finance could bring to public good outcomes, to recovery, but also to a transition in the energy sector, in the transport sector, in dealing with inequality, including with the opportunities that digitalization offers. And here, I think we are learning a great deal right now from countries across the world, and a number of colleagues, ministers, and others will speak to their experience in a moment. Let me also emphasize that I think for the United Nations in particular, in the Financing for Development dialogue, the framing of this discussion with the 2030 Agenda and the SDGs is central. In fact, this morning I was reading a briefing note from BlackRock on precisely the integration of UN SDGs in investment and highlighting the overlap also between many of the parameters that the private financial world uses to look at investments, including those of the Sustainability Accounting Standards Board. I think we are at a point where financial markets are able to recognize that SDGs are an opportunity to de-risk, that smart public policy can create enormous incentives, and the way we align them will in fact allow us to leverage the enormous wealth that the world has at its disposal. And just to remind ourselves, I read last week that global wealth during these pandemic months has actually grown from somewhere around 370 trillion to well over $430 trillion. So we live in desperate times, but we also live in the richest of times if you take the aggregates. So herein lies the key for unlocking private sector investment. Much of the work that we try to bring with the SDGs into national public policy discussions, but also into national public budget making, is precisely also an understanding of how to leverage the integrated national financing frameworks that the UN is now supporting in 70 countries around the world, is precisely the kind of tool that allows national decision making in the executive, in the legislative, to set priorities, to set the incentives. And in UNDP, we continue to try and push the frontiers also with SDG impact investment, looking at how the raising of bonds and also when equities are raised in financial markets can actually take the SDGs as a compass with which to invest. So with these brief introductory remarks, just to say that I think we are truly at a point where we have a development emergence in so many ways, but we also have an extraordinary opportunity to pivot forward. In Venice at the G20, we saw for the first time finance ministers now being seized centrally with the topics such as climate change also. The notion of carbon pricing, implicit, explicit, the necessity to align public-private investment, I think, is becoming the way forward. And therefore, much of what we will be discussing here this morning really does point the way out of the crisis in the short term, but more importantly also towards a transition and keeping the SDGs as our compass. Beate, thank you very much, and back to you.
Thank you so much, Achim Steiner, for this framing and for reminding us that it's not a question of wealth or the lack of wealth and resources. It's a question of distribution and of good policies to make sure that the resources go to where they are most needed. So thank you so much for this introduction. Now it's my pleasure to welcome Mr. Guy Ryder, the Director-General of the ILO. As you already heard, UNDP, ILO, UNCTAD, we have worked really closely on this issue of financing. DG, a pleasure to hand over to you, please.
Thank you very much, Beate. Greetings to everybody. Firstly, I want to thank Canada and Jamaica for their remarkable leadership in the Financing for Development initiative, and also my appreciation to UNDP, UNCTAD and DESA too for our excellent cooperation in support of the initiative. Now, I could have spent my time repeating more or less exactly the same things that Achim has already said, but I'm going to come at the story from a slightly different angle. What do we see? Well, we see the world hopefully emerging from, certainly not a definite emergence, from the biggest economic and social crisis that any of us has ever known. I won't burden you with the statistics, but I think suffice to say that to date, and it's not finished, the pandemic has imposed an economic and social cost 4 times greater than the financial crisis of 2008, 2009. And we're seeing this hesitant recovery. If you look at the aggregates of the global economy, one would be encouraged. But if you look a little bit closer, the story is not quite so benevolent as the aggregates might have us believe, because clearly we are beginning to see a very uneven recovery process, which, amongst other things, runs the risk of exacerbating pre-existing inequalities and very much leaving people further behind than they were when we went into the crisis. And we have to channel finance, we have to mobilize finance in order to compensate for these underlying negative tendencies. You know, in the recovery now, what are we seeing? We're seeing very, very high levels of demand and very constrained supply because global supply chains have got blocked up. We run the risk of finance going the same way. Demands on finance are and will be multiple. for climate, for vaccination, for social protection, for education, etc. And the supply risks being insufficient, and we could get into a very difficult situation given this juxtaposition. We've seen 16 trillion already spent or allocated for coping with the effects of COVID-19. Encouraging on the one side, because it shows what we can do when our mind is put to it. Worrying on the other side, because there are consequences for public budgets arising from that effort. And this is, of course, where the private sector becomes so very important. Let me just make a couple of statements which might sound like saying the obvious, but in the end, all finance originates from successful private sector activity. The wealth creation that comes from the private sector, the job creation that comes therefrom. So the first thing we have to make sure happens in this recovery process is that we provide the conditions after the support offered during the crisis. We have to offer the conditions for the private sector to expand and to prosper and to produce that type of decent work upon which all development processes eventually depend. At the same time, we have to find ways to ensure that successful business operations imply activity which advances and is aligned to the 17 SDGs. It's not automatic, but it is certainly something which we're seeing companies committing to. The job of the finance sector in all of this, of course, is one of allocation. You said earlier on, Beata, this is a question of distribution and allocation. We look to the finance sector to be effective in allocating resources to those areas which make enterprises successful and which produce results which are in line with the 2030 agenda. And finally, there is a last bit to this finance story. We have to ensure that we have in place, and perhaps this was something Achim saw happening in Venice, we have to make sure that there are tax fiscal systems in place which are equitable and effective and ensure that part of the private sector's activities contribution to development is contributing to a fair and equitable and transparent and effective tax take to the state. Put all those bits together, and finance, which by definition defines the limits and the extent of our ambitions in terms of development, can be harnessed to play the crucial role that it must in the onward-looking recovery process. A small advert at the end of this, because after all, I'm coming from the ILO. Our conference did adopt what we think is a very important call to action a few weeks ago for a human-centered recovery process, which we think pulls a lot of these ideas together and can hopefully be a helpful hook in to the development, the financing for development discussion. In any case, we look forward to continuing to cooperate under the leadership of Canada and Jamaica and with our multilateral partners. Thanks, Beata.
Thank you, Guy Ryder, Director-General of the ILO. And now I'd like to hand over to Mrs. Isabelle Durant, the Acting Secretary-General of UNCTAD. We heard already the importance of wealth creation, the enabling environment, and of course, UNCTAD plays a very important role in this respect. So I have the pleasure now to hand over to you for some welcoming remarks.
Thank you, Beat. First of all, it's my turn to thank Canada and Jamaica because I think that this kind of alliance between two countries and a lot of organization around this question on financing for development, for sustainable development goals, is an alliance which is really fruitful, and it helps to maintain and to continue to maintain the question of FFD high in the political agenda and high in all the radar. And for that, frankly, thank you, because it was really helpful to have this kind of alliance. So we know so well that the cooperation is key today in this difficult issue. And not to repeat what Achim and Guy said just before me, I would like to focus on one specific responsibility that UNCTAD took in this alliance. This is what we call in the jargon the cluster 3, related to all what is investment, finance and technology. And on investment, you know that UNCTAD is working a lot, scrutinizing all investment issue. And we know that in this case for SDG investment, the situation is rather bleak, because the COVID-19 crisis has caused a dramatic fall in foreign direct investment into 2020, with global FDI flows dropping by 35% to $1 trillion. So that's really a massive decline and deprives many developing countries from a critical source of capital. But the crisis resulted in a collapse of investment flows to sectors relevant for SDG in developing countries. In fact, all but one SDG investment sector registered a double-digit decline from pre-pandemic levels. Well, there is nevertheless some signs that international investment is recovering. It could take nevertheless time to get a speed, and we expect that firms and financiers will still be cautious with new overseas investment in productive assets and infrastructure, especially in developing countries, taking into account the question of carbon price, as Achim said, and also trying to focus on the sector as renewable energy, transport, infrastructure. We just need concerted action by all stakeholders to ensure investment in resilience is promoted, stimulus between infrastructure and industry is balanced, and the implementation challenges of recovery plans are addressed so that all countries and all communities can benefit. Our recently released World Investment Report provides a policy framework on how to achieve such outcome. And the report also discussed the contribution of capital markets and sustainable finance to this endeavor, and the need for a global framework for sustainability reporting. This is a matter that we will touch upon today. Second issue, which is also related to financing, is the question of the digital divide, because that's a technological issue. And we know that it is something which is also key and requiring financial investment as well, but also literacy and capacity building for all different countries. And the pandemic has further highlighted the depth of the digital divide between and within countries. And as the digital revolution accelerates, many countries and whole continents risk being left behind. And this situation needs urgently be addressed before it could be too late. Catching and riding on technological waves is a big challenge, especially as there is not one but two waves of digital transformation. The first wave is just the digital revolution of Web 2.0 technologies. This wave is at its peak, but half of the world today is still not connected to internet and hence has not been able to catch this wave. But there is a second wave. And this second wave is highly data-driven and involves development in artificial intelligence, big data analytics, robotics, Internet of Things, blockchain, and other frontier technologies. And this wave is at its initial stage. There are very few countries that create the technologies that drive this revolution. Almost none in the developing world are well prepared for the consequences. But all is not gloom and doom. In our technology and innovation report, we argue that frontier technologies have enormous potential for improving people's lives and protecting the planet, and this can make critical contribution towards achieving the SDGs. Of course, it requires also not only a capital of knowledge, but also a capital as such and the financing. But we have seen powerful examples in developing countries of using frontier technologies to track diseases, create early warnings for pandemics and natural disasters, and monitor crops and droughts. So the question arises as to how we can support countries to benefit from the digital transformation. For that, we need coalition, a little bit like Canada and Jamaica did together, and keep the question of technology high in our radar, because that's also something that we cannot forget in the next step for recovery, taking into account the different SDG. That's two areas where UNCTAD tried to help and provide this big alliance between organization and countries. Thank you.
Thank you so much, Isabelle Durant, Acting Secretary General of UNCTAD. Thank you for bringing in this dimension of technology and the importance of wealth creation through investments and really harnessing the digital revolution. So we've heard in this opening panel the importance of financing climate action, a socially inclusive recovery, and bridging the digital divide. This now finishes or brings us to the end of our opening panel segment of this event. And thank you again to all our distinguished speakers. It's now my pleasure to welcome Her Excellency Mrs. Jutta Urpilainen, who is the Commissioner of the European Union for International Partnerships. Mrs. Urpilainen, thank you for connecting and for being with us here today, as well as Her Excellency Dr. Hala El-Said, the Minister of Planning and Economic Development of the Arab Republic of Egypt. Minister, welcome also, and thank you so much for your leadership on those issues. So I'd like to start with you, Mrs. Urpilainen, if you could please share your thoughts on the importance of the private and financial sector in financing development.
Thank you very much, and many thanks to UNDP and UNCTAD and the ILO for gathering us here. Very nice to meet also old friends and the new ones on the screen. How we finance a sustainable and resilient recovery is, of course, our #1 challenge right now. COVID has hit the most vulnerable in our societies the hardest. Economic growth is declining, tax bases are shrinking, spending pressure is increasing. If we do not take full-scale action urgently, we will not reach sustainable development goals by the year 2030. ODA definitely has a role to play, including in helping channel resources to the right investment opportunities. But ODA alone cannot fill the SDG financing gap. While global ODA stood at just under 150 billion euros in 2020, UNCTAD estimates that developing countries face a 2.2 trillion euros annual investment gap to reach the SDGs. Long-term sustainable recovery requires comprehensive strategies and both public and private investments. So what is the way forward? How do we together ensure a green, just and resilient recovery? The EU is working to make the call for a global recovery initiative a reality at the multilateral level by linking debt relief and investment to the SDGs. 3 brief points there. First, for a return to growth and a sustainable transition, we need domestic resources mobilization and public finance management. Earlier this year, we launched new commitments under the Addis Tax Initiative 22-25 declaration. And this gives us the necessary framework to monitor our joint ambitions, including on equitable tax policies, how we involve civil society and ensure policy coherence for development. We have to collect more, that's the fact, in a more equitable and sustainable fashion. But dear friends, we also have to spend better. And this means more transparency and accountability and procurement systems that deliver the public services needed. Secondly, we must support our partners in developing countries to make strategies to finance the SDGs, relying on the full range of financing resources. The EU is doing this with the UN through the integrated national financing frameworks. The focus is on long-term investment and strengthening medium and long-term planning. So far, these frameworks have been successful in almost 70 countries. And this brings me to my third and final point. Global recovery requires accelerating the flow of private finance towards low and middle income countries to bridge the SDGs financing gap. Resources needed to be channeled to the right investment opportunities, and the EU is a front runner in sustainable finance. Financial instruments linked to sustainability can help significantly in mobilizing private finance in support of the SDGs. And we will therefore be increasing support to investments with the European Fund for Sustainable Development Plus that will help to use public funds to de-risk investment. So, colleagues, the EU is very committed to supporting our partners on those three strands, to incentivizing the green and digital transitions, and ultimately to building back better for all. Thank you very much.
Thank you so much, Mrs. Jutta Urpilainen, Commissioner of the European Union for International Partnerships. Collecting more and spending better. I think this was a very good framing for the for really focusing on the core responsibility of governments. And also thank you for introducing the notion of the integrated national financing frameworks. And this is a good transition to Minister Dr. Hala El-Said from Egypt, because we know that Egypt has made great advances on this on these issues. So, Minister, it's a pleasure now to hand over to you.
Excellencies, ladies and gentlemen, I would like to extend my appreciation to the UNDP, UNCTAD, UNDESA, and the ILO for extending invitation to participate in this side event at the margins of the high-level political forum. This presents a distinctive opportunity to enhance dialogue and share valuable insights surrounding the mobilization of finance for sustainable, inclusive, and resilient recovery post the COVID-19. The pandemic and its far-reaching and multifaceted implications undoubtedly affirm the interconnectivity of societies and welfare across the globe. As such, it is imperative for policymakers to revitalize efforts towards achieving the SDGs. And in this respect, we must address the global financing challenge, which is considered one of the most impeding barriers hindering the implementation of the 2030 agenda. The challenges posed by the pandemic are surmountable if and only if countries are able to diversify and mobilize sufficient funds in order to bridge the financing gap. At this juncture, I'd like to share with you what the government of Egypt did. The government of Egypt is committed to create an environment in which every stakeholder is enabled to operate as a key player. In this context, the role of businesses and the financial sector is indispensable in financing a sustainable recovery post the COVID-19. Government's efforts are oriented towards facilitating private sector activity through measures that enable a more conducive business environment, reversing the private capital shortfall that arise due to the pandemic. Prior to the pandemic, and in line with SDG 8, decent work and economic growth, which promotes inclusive and sustainable economic growth and decent work for all, the government of Egypt embarked upon the first phase of the homegrown economic and social reform program that aimed at achieving macroeconomic stability and enhancing competitiveness. This program included, among most, an energy subsidy reform, along other measures, and such measures provided us with the adequate fiscal space to launch a comprehensive stimulus package partially intended to ease the burden on businesses during the pandemic. Thereby, we maintained a very good balance between ensuring people's health and sustaining economic activity. And as a result of the reform, and despite of the pandemic, we were able to achieve a positive economic growth rate, 3.6% in 1920, and we are expected to have this year, 2021, 2.8% positive economic rate, with a single-digit unemployment rate reaching about 7.5%. And building on the success of the first phase of the program, we pursued the second phase, entailing a wide range of well-targeted reforms at the structural and legal levels, targeting the real side of the economy and centered on enhancing the business climate with hopes of stimulating investment in productive, job-creating industries, especially the ICT, agriculture, and manufacturing. Throughout both phases, the role of the private sector was at the nexus of the government's reform. Furthermore, we continue to strive for further and strong partnership with the private sector. In this regard, we established the first sovereign wealth fund of Egypt that was established in late 2018, employing best practices across the board to unlock the value of Egypt's underutilized and efficiently utilized assets and ample resources through creation of a long-term public-private partnership and co-investment opportunities. Another important initiative under the umbrella of SDG 17 is the preparation of the first of its kind national report on financing for development under the auspices of the government of Egypt, represented by our Ministry of Planning and Economic Development, and of course under the auspices of the Arab League and the UN Special Envoy on Financing for Development. This report would be available before the end of this year and tackles the entire spectrum of financing for development and provide specific key policy interventions. And to complement this effort, we launch a project with the UN Joint SDG Fund to set an integrated national financing framework for costing the implementation of SDG at the national level. The sectors covered by this project are education, health, social protection, transportation, and with women empowerment set to be cross-cutting priority on all segments. We also, the government lays significant attention to a very important sector in Egypt, which is the medium, small, and micro enterprise sector, as they have an essential role in promoting innovation and stimulating growth. And with the amount of informal sector, this has prompted the government to make formalization desirable by creating incentives and communicating benefits to this sector. We introduced a new law offering financial and non-financial incentives and rising entrepreneurs to provide credit facilities and training programs. Also, the financial sector has a paramount role to play in removing systemic barriers to access credit, especially for women and youth. And in this context, the Central Bank of Egypt directed banks to increase finance from 20% to 25% of their credit portfolio. This would benefit about more than 120,000 ventures, creating and maintaining about 1 million jobs. With the COVID crisis triggering an unprecedented sense of urgency towards climate action, the Egyptian government also strives to accelerate momentum towards a green-driven recovery, one that puts nature at its heart and ensures equitable benefit to all economic sectors. In that sense, it is important that we investing in environmentally friendly projects such as tertiary treatment sewage projects, renewable energy, and sustainable transport. Another important milestone was the successful launch of the first green bond in the MENA region with a value of $750 million. And as the government paved the way for sustainable finance, the private sector followed this path, as evident by the biggest private commercial bank in Egypt open subscription for the first private green bond valued at around $100 million. Distinguished guests, as the next steps will be decisive for the global economic trajectory, I would like to reiterate the importance of reuniting on all fronts for the sake of sustainable, inclusive, and resilient recovery. We must push multilateralism to fulfill ambitions on the global level while promoting a multi-stakeholder strategy on the national level. Only together, governments, businesses, civil societies, and financial institutions, we will be able to unlock the pathway towards a fully fledged rapid economic recovery, offering boundless opportunities for our people. Thank you.
Thank you so much, Dr. Hala El-Said, Minister of Planning and Economic Development of Egypt. Also for giving us some hope in the midst of the crisis and for sharing that very encouraging progress that you've just described. You've also mentioned the importance of alliance building. We also heard this from the Commissioner earlier. And this now helps me to introduce the next and final panel of our event today, our multi-stakeholder panel, where we will hear the voices of from businesses and from civil society. And again, for the sake of time, I will go right into our panel and introduce our speakers. We have with us here Dr. Mohamed Farid Saleh, Executive Chairman of the Egyptian Exchange, Mr. Matthew Gamze, CEO of the SME Finance Forum at the International Finance Corporation, Mrs. Audrey Rojikov, Secretary General of the Finance and Common Initiative, and Mr. Pradeep Mehta, Founder and Secretary General of the Consumer Unity and Trust Society based in India. Great to see you all here. Thank you for connecting. And we will start with Mr. Farid Saleh. Are you there? Can you switch on your video, please? Okay. Yeah, we saw him earlier, but if he's not here right now, we will then start with you, Matthew Gamze. You're already connected. Please, the floor is yours.
Oh, thank you, Beata, and distinguished ladies and gentlemen. It's a great honor to be asked to speak in this meeting. I feel a little bit strange being said to be a stakeholder representative because while I did spend 25 years in the private sector, I've been 16 plus years in the IFC, which is of course a public sector organization, a multilateral, it's the private sector arm of the World Bank Group, as I think all of you know. But for the last few years, I've been running a G20 created structure called the SME Finance Forum. And in that role, I feel more comfortable in this stakeholder role because we represent a growing association of finance industry players from around the world, now more than 230 institutions who are united in their desire to improve access to finance for small and medium enterprises. And while with my IFC cap on, I could say a lot of things about the topics that our speakers have very eloquently talked about. Let me focus more narrowly on, from my stakeholders' point of view, about why we need to really keep small and medium enterprises in mind as we consider how the private sector should be involved in financing the Sustainable Development Goals. I think it goes without saying that that SMEs represent a substantial amount of employment worldwide. Perhaps what's less well understood is that the poorer the country, the greater the share of employment that SMEs occupy. I don't need to tell that to our ILO colleagues, of course, Beata, my apologies. But you know, it's also true that, and maybe less understood, that SMEs are usually the provider of essential goods and services for many of the world's people in both rich and poor countries, and they are the source of key innovation in many areas. At the same time, SMEs are always hard hit by crises, and COVID is no exception. We are seeing that COVID has struck more broadly, more widely the SME community than any other crisis in my lifetime. At the same time, SMEs always show great resiliency in crises. It doesn't mean that all of them survive, and many SMEs are going to disappear, but you are already seeing SMEs' ability to adapt and adjust. And one of the key aspects of helping them do this and continue to provide employment opportunities and essential goods and services is to make sure that SMEs have access to the financing they need to make the adjustments, to make the changes, to seize on new opportunities. And unfortunately, that was always a problem even before COVID. And while that, the one irony is that maybe COVID is raising awareness of what we might be able to do to address this challenge. And I say that in respect to the biggest challenge that's always faced financing SMEs has been surmounting what economists call the asymmetric information barrier, what in plainer terms means in order to have enough knowledge real time to make responsible risk management decisions in financing firms, it's always been impossible for SMEs. Why? Because the only way you could really have that information was to physically go out and literally check on what's going on for most SMEs. They didn't provide information that bankers and other financiers are used to getting to learn about their customers and make responsible decisions. So that's why they may have paid lip service to the sector, but they always were very limited in what they've been able to do. On the other hand, COVID has shown that this is impossible. So everybody has to recognize the need to change. And SMEs have recognized it too, because they too, if they depended on physical interaction with their customers, physical interactions with their suppliers, with their buyers, they've realized that this can't work anymore either, and they have to develop more strategies. And this has led to an acceleration in digital trends, which we have a unique opportunity to capitalize on now. It's an opportunity if we combine both a building of private sector awareness of how these new digital ways of assessing SMEs, of financing SMEs, of buying from and selling to SMEs can be done, but it also needs equal government recognition of how do we create infrastructures where we can accelerate these digital trends and make them as inclusive as possible. And in this sense, we have to pay special attention, as many have said, that we don't cause this to actually worsen divides, not just country level divides, but divides between women entrepreneurs and male entrepreneurs, divides between young entrepreneurs who, because of their youth, might have less of a business track record than others. And there are other entrepreneurs from disadvantaged groups who might have been outside systems, who also we must have to emphasize how we can develop these infrastructures that can really embrace them. Because by doing that, we can find ways that we can do smaller ticket transactions at scale and affordably. Because at the end of the day, as many have said, we need the private sector to be a major player in this. It cannot be done by governments alone, but the private sector has to do it in a way that is itself financially sustainable, which means that it has to be efficient and viable. But there are ways to do this. And finally, there are also ways to do this that can contribute to the other sustainable development goals outside of jobs, because while there's been a lot of attention to green finance, and I applaud what we just heard about Egypt with green bonds, and there are many countries doing this, if we look around, most of the attention to greening, to improving social performance is centered on big ticket relationships. Now, yes, it's true. No individual small business is causing a major problem with respect to the Sustainable Development Goals by itself, nor is any small business achieving the Sustainable Development Goals by itself. But you add the tens of millions of small businesses, the hundreds of millions around the world together, and suddenly you see important dimensions of these challenges and important opportunities for the future. But only if we can find ways to be greening finance at the SME level as well as at the big ticket level. And these new digital technologies, particularly combining the Internet of Finance, especially e-commerce and e-trade, with the Internet of Things, where we can use new technologies like blockchain to have traceability and accountability where we never could do it before affordably. These are a real unique opportunity to not only help in the classic goals that we associate with small firms around employment and gender opportunity, but we also can help really make a big difference in climate, in labor relations, in pollution control, and many other important areas. So with that, I hope that this has been a useful contribution, and I really applaud the United Nations agencies for holding this meeting on this very important topic today.
Thank you so much, Matthew Gamza, and really for bringing it down to the very concrete level, the challenges and opportunities of small, medium-sized enterprises, and the importance of providing financing to their activities. So let us now turn again to our representative from the financial sector itself, Dr. Mohamed Farid Saleh. You are the executive chairman of the Egyptian Exchange, but you're also the chairman of the Emerging Markets Working Group at the World Federation of Exchanges and the chairman of the Sustainability Working Group at the African Securities Exchange Association. So many hats. It's a pleasure to have you here. Mr. Farid, please, the floor is yours.
I would like to thank you. First of all, I would like to thank the UNDP, UNCTAD, ILO, and UNDESA for gathering all of these, I would say, nice people talking about sustainability, which is quite a very important topic that I believe will be shaping the future going forward. Before maybe delving into how exchanges in terms of the sustainability stock exchange initiatives and other initiatives that we have worked on as EGX or locally or even international markets, it is quite important to elaborate on some of the challenges that have been posed by COVID-19 and its aftermath. Indeed, COVID was quite an important, I would say, alarm for all markets and for all, I would say, households and firms, that business as usual is not always an easy thing to achieve. And the COVID-19 and how it is going to change the modus operandi or the business models itself, or for SMEs, not only SMEs as my colleague has been mentioning earlier, but as well for large corporations, is quite an important thing to be taken into consideration. And it showed that sustainability, or the ESG that we always refer to, should be expanded a little bit and maybe cover areas that is pertinent to real science, innovation, and investment. So this in itself could be something that is provides sustainability for the entire human race, to see more investments and more financing in these areas, and should be considered in the ESG area. Adding to that, of course, technological advancements and investments is quite important to be shown in that regard. Capital markets in general and stock exchanges, maybe I would say, have a quantum leap when it comes to sustainability and requiring listed firms to provide disclosures pertinent to the three main components of sustainability: the environmental efforts, social responsibility, governance, and if you want to add to it, all gender-related issues in that regard. And we as EGX participated in the launch of a new index, which is the Gender Equality Index, issued by one of the entities that is covering the MENA region, and would be having participants from the MENA region, that would require companies to be members of that index to disclose to the public not only the number of, I would say, women on board and in higher level management of companies, but as well the practices that firms are doing to ensure equal opportunities between male and female, working environment as well that is in the right place to allow for women to reach their goals, while providing them with the required, I would say, working environment, conducive working environment. Add to that, we as EGX has issued an index for sustainability starting from 2010, covering companies that are scoring the highest for environment, social, and governance. Maybe the weight of governance is quite extensive, but it has components of environment and social responsibility in that regard. As you have mentioned, we have been founders of the Sustainability Stock Exchanges Initiative. In that regard, we provided training and requirements for firms, listed firms, on GRI and Global Compact methodologies of disclosing ESG-related issues. Participated, as I mentioned, in the recently inaugurated index for the region for gender, amending listing requirements to cement the components of governance in that regard. But having said that, with all the success that most of exchanges are doing, either when we talk about equities or even fixed income securities, we are seeing that the gap is growing between the amount of information required and actually posted by the listed securities and the non-listed ones. So we have a significant gap that we are witnessing as exchanges between what is required to be in the public domain and public markets arena, and as well going to not being listed and just be satisfied with the minimal level of disclosures when it comes for ESG, or even without disclosing anything related to ESG in that regard, and just disclose the financial matters of companies. So one of the important aspects, if we want to see a greater impact, and not only to see, I would say, success models or successful companies that are counted on 1 or 2 or 3 hands, whatever you name it, we will be needing to generalize some of the minimum requirements of ESG to be going to entities that allow or establish firms, or allow for the establishment of firms like company registrars, investment authorities, and so on and so forth, if we are aiming to see a global impact that is improving in that regard and achieving sustainability. Another challenge that we have been seeing with the pandemic is actually the increase in the saving ratios, the global saving ratios, due to the decline in consumption. And these savings need to be channeled. I've heard the word channeling in savings and channeling, I would say, investments quite extensively in the early sessions. So one component to be able to challenge is how to link the public markets via financial products with the ESG investments and related matters in that regard. So this is quite an important matter to channel, and how to channel and to link the public markets and its requirements with specific investments that are earmarked or labeled as ESG on its various fronts. In Egypt as well, we, as we have heard, we had our first sovereign green bond in that in 2020 with a magnitude of 750 million USD. We recently had the first private sector financial institution issuing a green bond as well in that regard. So capital markets are quite advanced. We need to see what the capital markets have succeeded in, and to move it and to trickle it down to the other non-listed securities to enable every single individual to participate in the ESG investments, and basically democratizing capital across all nations. One important aspect as well that we need to take into consideration with the democratization, that without having a significant role from a demand side, which is basically pension funds, I would say international donor agencies, to create and to communicate proper savings and proper, investment appetite in those particular securities, in those particular financial products, we will not be seeing a sustainable impact on human beings. We all know that long-term savings and the incremental savings and pensions in general are the ones that can create wealth for the humanity and for human beings in the long term. So basically, how to ensure to aggregate and to collect a higher percentage of population participating in pension schemes and the development of pension schemes that are earmarked for ESG products is another very important point that I would say all nations need to work on to see that flourishing and to create a middle income class that is improving in the long term. Definitely SMEs have to be in part of this equation, and I'm happy to have heard some of the important aspects about how financial institutions, among which would be exchanges, to deal with SMEs from a different angle rather than relying on the traditional assessment approaches. This is quite important, and relying on technology, specifically in the after COVID situation, is quite important to ensure the inclusion of these entities and hence participation, and maybe do collective, I would say, efforts for them to be issuing green related, sustainable related products. Thank you very much.
Thank you so much, Dr. Mohamed Farid Saleh, and really for showing us how sustainability concerns are entering the financial sector. Very encouraging to hear this. We are running a little bit short of time, but we have still two really distinguished speakers here with us on our panel. And it's important to now listen to them who've been involved in coalition building. So I will start first with Mrs. Audrey Rojkov, the Secretary General of the Finance in Common Initiative, who you've been involved in mobilizing public development banks to accelerate the transition to financing the SDGs. So we're very curious to hear from you, please.
Thank you very much. Thank you to all the organizers and of course to the UNDP for your support in promoting the role of public development banks and for the invitation today. I also thank very much the other members of the panel for their contributions, because I'm going to talk from another side, from the public development banks. The public development banks are actually a powerful lever to mobilize the private sector and to help redirect all financial flows towards a more sustainable and resilient economy. This was a key topic of the first edition of the Finance in Common Summit, the FIX, that gathered last November in 2020, the 450 public development banks operating either at subnational, national, regional, international, or multilateral levels in every UN constituency. Together, this public development bank collective invests $3 trillion every year and represents 10% of global investments worldwide. And we discovered last year, when we organized the summit and prepared its deliverables, that there is actually a very strong consensus among PDBs, public development banks, to work and join forces around the implementation of the SDGs. We all want from PDBs to improve the quality of our own investment, and we all agree that we have a role to play in redirecting, reorienting the other 90% of financial flows. And we are all waiting for a way stronger mandate to be set by our shareholders to mobilize private finance. This is not yet the case everywhere, but we are actively working on it. And the three levers that the public development banks use to foster the private sector involvement are, first, on the asset side, PDBs provide blended finance through a range of instruments such as green credit lines for energy efficiency or renewable projects, but also by investing in specific funds. We have two very recent examples, like the Climate Finance Partnership with BlackRock to invest in renewable energy in Asia, Latin America, and Africa. That was confirmed last week, and it involves AFD, KfW, and JBIC, among others. Another example is a coalition of DFIs collaborated in the recent weeks also to finance new production lines by Aspen to produce vaccines in Africa. The second way of promoting the private sector involvement from PDBs is on the liability side. PDBs created the green and sustainable bonds market, which sent a powerful signal on the financial markets that there is actually a demand to financing assets compatible with sustainable and resilient development. We have recently the GBSA in South Africa and BSA in Argentina that have recently opened this market in their countries. The third one is on methodologies. Several development banks are developing definitions and metrics which can be used by the larger development finance community. And for example, we have the IDFC, the International Development Finance Club, and the MDBs that are working on the methodologies to operationalize the alignment with the Paris Agreement in the perspective of COP26. I also commend the work done by the OECD, the Green Climate Fund, the World Bank, and the UNEP for organizing the work on the development of standards on the transformation of financial system for climate, on setting up country platforms, and on promoting innovative financial instruments. We are very working closely with them, and you know, in parallel, all the various business coalitions are also proposing alignment frameworks, but still there remains challenges in terms of having a common language for how to talk about sustainability. And this has to be reconciled with our efforts from all of us. Precisely, the FIX is developing proposals on how to reinforce the link between all the initiatives, and the FIX engagement with the private sector is indeed growing. In addition to the International Chamber of Commerce and the Institute for International Finance that are already members of the FIX, we now have the Global Impact Investing Network, the GIN, and the Long-Term Infrastructure Investor Association, the LTIIA, that have recently joined the FIX movement as signatories of the PDB's Joint Declaration. Last but not least, I just would like to mention that we have started a dialogue with the Global Investors for Sustainable Development Alliance, GISD, of the United Nations Secretary-General and managed by the UNDESA. During the second edition of the Finance in Common Summit in October 2021, that will take place in Rome, end of October, as part of the G20 agenda, hosted by the Italian PDB Cassa Depositi e Prestiti, we will organize a PDB investors dialogue to further structure and scale up joint instruments for investing into SDG intense projects. So I would just like to close by stressing the importance of the SDR issuance just approved by the IMF board. I know very well about the nature and technicalities of the SDRs as reserve of central banks, but we call for innovation to connect the dots and mobilize all public development banks, a proposal to channel the SDRs through MDBs that are already prescribed holders in order to reinforce other national and regional PDBs on their continent could be defined and hence leverage even more their capacity to mobilize SDG and Paris-aligned finance.
Thank you so much.
Thank you.
Thank you so much, Mrs. Rothrock. I will now hand over to Mr. Pradeep Mehta, the founder and Secretary General of the Consumer Unity and Trust Society, our last speaker here on this panel. Mr. Mehta, please, the floor is yours.
I'm here. Thank you very much.
Succinct.
I'm speaking from Jaipur in India, and therefore it is good evening to everyone, or namaste, as we say in India.
Mr. Mehta, can you just speak louder? You were good this morning when we tested.
Right.
Just a little bit louder.
I said, can you hear me? Is that good? Good. Good. Anyway, namaste to all as a greeting that we wish 24 hours. Having said that, let me introduce my organization in about 30 seconds. It is a global organization. We work in many countries of the world with our own centers, including in Geneva and Washington, and 3 centers in Africa. So we do have a lot of grassroots experience, as it were. Now, what is happening, what we see in many countries, many developing countries particularly, is the pandemic has created havoc. So the attention towards any other governance issues is becoming more and more difficult in many sense. Now, in Zambia, for example, what we see is that public debt management is still in a very bad shape. And that is something which we are acting very strongly to see as to how it can be improved. Now, if the result of a lot of this chaos, and basically this is quite uncertain as to how long, and for the third wave of the pandemic and so on, Africa, as most of you know, has recently been hit by the second wave, as against Europe or Asia, which is still have overcome the second wave so far. Now, as a result of this, and I hope Guy is here. Guy has left.
He's still here. Go ahead.
Yeah. Anyway, now, as a result of the pandemic, there was a very major upheaval in India. For example, about 20 to 30 million workers fled from industrial cities to their homelands in the much underdeveloped regions. It was a massive human crisis, just to give you an example as to what caused. Now, that means the production is still to be catch up. Now, what we have seen is that many of the employers were small and medium enterprises, which really did not have the resources to be able to take care of their workers in the event of this kind of situation, and they, many of them were unable to produce or even sell. Now, in order to gain that back is happening. An important factor which has not been reckoned by in many such discussions, even today I see, is that in the developing world, nearly 80% of the SME are in the informal sector. One or two people, etc., which anyway, for them, the many kinds of facilities that were spoken of now in terms of financing, etc., is a miasma. It's absolutely difficult to even imagine as to what happens in that situation. And they are the worst affected in this kind of situation. The daily wage earners, for example, and so on. Now, the government is making all efforts, particularly if I say in India, for speeding up recovery, bringing in new schemes as to how they could help various sectors to recover. But how does it transfer into the informal sector, the SME, is yet to be seen, in the sense that will that transfer take place as effectively? Now, these are some domestic issues that I wanted to speak to you about. Now, when we talk in terms of international issues, what is very interesting is if you friends remember the last G7 declaration on coming out with an infrastructure facility of $4 trillion, where they speak about private sector as a big partner, and that is which sort of addresses the subject, Beate, as has been posed to us, this particular thing. But even now, it is not clear as to how it will be collected, how it will be managed, etc., etc. Now, we spoke about vaccines, which is again today a very critical aspect. Now, even in the G7 declaration, they spoke about 1 billion vaccine doses to be provided to the poor countries in the world. A mention was also made about developing manufacturing capacity in many poor countries, which will also take its own time. As it stands, let us not forget that we have to focus on sectors in order to address many of these problems. The pharmaceutical sector is a very important sector that needs to be addressed by the international community, that they do allow, for example, the issue of the waiver of TRIPS has not really moved forward. The European Union is objecting to it, for example. The US has agreed to. Now, I mean, there are various sectoral issues which need to be addressed in order to move the agenda of this discussion in terms of financing. Now, I already spoke to you about public debt management, which is again a serious problem in many countries, particularly after the pandemic, where the economies have been hit badly. Now, let me conclude, Beate, knowing that time is up, and being the last speaker, I don't wish to be asked to conclude, which often happens, to the last speaker. I have two recommendations to make, which is what is very important, which is part of both public sector and private sector issues. That we need a kind of a Marshall Plan from the rich countries to be able to help the poor countries to recover their economy. And secondly, and most importantly, when we look at private sector financing, why are we forgetting a very old proposal which has been dormant and needs to be revived, is the Tobin tax. A very small, negligible, small percentage of international financial flows can raise trillions of dollars. And therefore, my appeal to the international community in this August gathering is that look into the Tobin tax as an issue for private sector financing, which is then without any burden to any particular country or any system. Thank you very much, Beate.
Thank you so much, Pradeep Mehta. Last but not least, your messages are well received and heard. Thank you so much. I will not attempt to conclude or wrap up this very rich discussion also because of time, but just want to again thank all the panelists for being so succinct and sharing their experiences, being with us here today, as well as to the co-organizers of this event, UNDP, UNCTAD, our thanks also to UNDESA, as well as to the ILO. Thank you so much. The official segment of the high-level political forum has already started. So we will conclude this special event, again, with a warm thanks to everyone who contributed to this discussion, which will certainly continue beyond today. Goodbye. Goodbye.
Thank you very much.
Thank you so much. Have a good morning, good evening, everyone. Bye.
Bye-bye.